Hi, this is Brant from TradeGuild.blogspot.com. It is the 14th of November, 2007. The market just closed a little bit ago, and I'm getting to some videos a little bit earlier. Usually it's pretty late. Actually, last night I did 3 videos very late. I didn't get to post them until today, so I hope you had a chance to go back and see those. And basically, what I was saying was don't get sucked into this market. It's a counter trend rally, it's a sucker's rally, an oversold bounce, short covering, whatever you want to call it, but it was not a sustainable move, in my opinion, and we saw that today. No follow through. One of the things you want to see on a reversal in the market is you want to see some follow through. Let's look at a daily chart of the spiders here, the S&P 500. You can see this was the big move we had yesterday. We had the gap up this morning. We had all the ingredients, but we just did not get that follow through. And part of the reason is because there was really no strong buyers. These were all short covering yesterday. And then anybody who was buying on the open over here was just, amateur hour and fear and greed, and those were the greedy guys. And these are the fearful ones. If we take a look at let's take a look at a 5-day chart, and I want to zoom out and show you. I mean, here we go with 2004, 2005, 2006. I mean, look at the volume in here, and then look at the volume over here, and notice how red that volume is. So we're seeing a top formation over here, and top formations are very volatile. They suck people in, they throw people out. But this is a top formation in my mind, no doubt about it. 100% top formation. We can see this is an hourly chart. You can see there is this kind of head and shoulders type of pattern going on over here. It's definitely not a real textbook head and shoulders, but I love these fractal type patterns, like head and shoulders within a head and shoulders. And if you look at the right shoulder over here, you see another head and shoulder. And these are just all big zones of supply, or better known as resistance. And you can see, let me clear this up, we'll zoom in a little bit, and there's that head and shoulders. But you can see where we gapped up this morning right into supply over here, and there's just no way this market was going anywhere. It drifted the rest of the day. And we're going to take a look at a 15-minute chart, and here's today, here's the gap up, here's just this listless drifting. Just there's no buyers here because all these guys were short covering. And these guys are amateurs over here, so there's just no buyers in this market. The professionals are getting out, they're distributing shares. We had a big sell-off once the market saw that it wasn't going anywhere. Let's look at a 5-minute chart. You can see that we got a little bit of a consolidation sideways over here, and just after it retested this support, there's just no buyers there. Everybody's locking in their profits at the end of the day, and I suspect that there was some buying over here, and I'm going to show you why I think that. So we might get, actually we are going to get a little pop up in the morning. It looks like the S&P is about 3 points above fair value, the NASDAQ about 9.5. So we'll probably see another little gap tomorrow. So this morning Bear Stearns came out, and I think it was this morning, and they had a write down regarding subprime assets. It was $1.2 billion on their fourth quarter. The market cheered that. They loved it because it was less than they thought it was going to be. Bear Stearns gapped up with the rest of the market, came down. It actually probably did a little bit better in the afternoon than the rest of the market, but it sold off just like the rest of them. They said, we'd like to hope that the worst of the mortgage markdowns are behind us. We'd like to hope. This is Bear Stearns saying, they're hoping that it's done. And that's the problem with this whole subprime mess, is nobody knows how much exposure they have, what the CDOs are worth. It's just, there's no way to quantify it, and the market hates uncertainty. That's why they say when the missiles fly, it's time to buy with regards to war. When we go to war, when the war starts, the market rallies because the uncertainty of are we going to have a war or not is over. Okay, so when the missiles fly, it's time to buy. And we have, we would like to hope, well, the Marines say you can hope in one hand and spit in the other and see which one fills up first. So it's very disturbing. Market hates uncertainty, and I think it's just regurgitating. It's trying to get this subprime thing out of its system. And truthfully, it's going to, the market is a pendulum. It swings too far one way, too far the other way. And I think the truth is that it's going to be so bad, it's going to get so ugly that then people are just going to say, look, this is just ridiculous. And then I think it will be over. That's my opinion. Oil was up. Let's take a look at oil holders. Here, let's see what they did today. Okay, well, all right, looks like they did pretty much what the rest of the market did. And so oil was up 2.9% today, or $93.78 a barrel. And really, it's been kind of strange. The oil stocks just have not been hanging in there really all that well, with considering what oil's done. 8 out of 10 economic sectors closed in the red today. And let's take a look at some 3C on. Let's look at the Qs first. So here's the NASDAQ 100 ETF, and this is today. This is a 1-minute chart, and we're going to take a look at 3C. Let's see, which one do we want to use? Okay, let's use a little bit longer 3C, and we're going to look at a 5-minute chart. Okay, let's see what's happening here today. Okay, I'm going to zoom in a little bit more so you can see. This is today. This is this morning. That's the gap up in the Qs, and you can see where 3C is here, and then you can see just all day, even though this point is higher than this point, you can see 3C is just moving down all day, steadily moving down. You know, it's just showing there's no follow-through interest there. There's no buyers there. Some people just fiddling around, and sellers at the end of the day. So no follow-through. That's a very, very bearish thing to happen. Let's take a look at another 3C here. This one's a little bit faster, and this is a 5-minute. And again, you can see there's that gap up. You know, lots of hope. And you know, even here, look how well it performed. You know, just really running with this rally. And then even though we have, you know, higher prices over here, just moving down all day long. Let's take a look at the airline stocks today. Let's see, UA. I think it was UAL, United, and Delta. We're talking about a merger today. So let's look at something without. Actually, no. Let's go back to that 3C. That was interesting. Okay, here we are. Here we are. So isn't this interesting? Rumor talks came out today that UAL and Delta were going to merge. And look at this, as the stock is kind of trading down in the morning. Look at the positive divergence that developed over here in 3C. So, you know, somebody know about these rumors? You know, I don't know. So there goes the rumor. Everybody's buying like crazy. And then they come out and say, no, there's nothing to that rumor. And then it just sells off. So you got to be careful. You know, buying and selling on rumors. Let's take a look very quick at Delta. You can see really the same chart pattern there in Delta. Zoom out a little bit. Yeah, same chart pattern there in Delta.